Hello, ladies and gentlemen. Welcome back to another Mining Stock Education Expert Interview. I'm your host, Bill Powers. Joining me today is Keith Neumeyer, the President and CEO of First Majestic Silver. If you follow the precious metals and mining markets, you already know who Keith is, and he doesn't need much of an introduction. Today, we're going to be discussing the 2008 outlook for First Majestic Silver and the silver markets. So, Keith, thanks for coming on the program to share your thoughts.
Well, Bill, it's a pleasure speaking to you, and so early in the new year, and things are looking quite interesting as the year develops.
Well, the first thing I'd like you to share about is your outlook for your company, First Majestic, in 2018, and I'm going to ask you to do that in response to the negative BMO, Bank of Montreal, report that they put out on December 22nd. If I could just share a couple summarizing points. On the 20th, First Majestic filed an updated NI 43-101 technical report for 3 of your silver mines, and then the analyst from BMO 2 days later wrote a negative report, which caused the shares to sell off about 9% on the day. In the report, he downgraded First Majestic to underperform from market perform and cut the price target from $9 Canadian to $7.50 Canadian. His critique was that First Majestic had underspent on exploration and development in recent years and is now playing catch up, and the share valuation, in his opinion, is too high compared to peers. So what would be your response to this analyst as we discuss First Majestic's outlook for 2018?
Well, sure. Giving BMO credit for an 8% sell-off in First Majestic share price is a little bit much. BMO is friends of the company. I've been doing business with them for over 20 years. I know most of the guys there, and I meet with them regularly on social occasions and, of course, in business occasions as well. And that particular report that came out was from a young analyst who had just taken coverage of First Majestic, and he had written several similar articles or stories on other silver companies. And we were somewhat disappointed with the approach he took. He is right to some degree, but it's very similar to what we've been saying as a company for over 4 years now. If you go to the company's website, you can see there's a slide in the company's PowerPoint presentation that shows declining reserves over the last 5 years. So I've been saying this for at least 4 years in my public presentations, that the mining sector as a whole has been suffering from lack of investment in exploration and development. And if you're mining gold or silver or copper or whatever the heck you're mining, and you're not drilling and developing those ounces or resources and developing more reserves and resources due to lack of cash flows, which the mining sector has suffered from, of course your reserves are going to go down, and that's just a function of investment. And so I agree with what he says. It is due to a lack of investment, and fortunately in 2016, with silver prices turning around the way they did, hitting the low $13 range in early January 2016 and ending up at $21 in August, and the cash flows that came into the business in 2016 and have continued in 2017, we've been able to start reinvesting capital. And if you compare our exploration spend in 2016, it was about $9 million, just shy of $9 million. And our development spend was around $25 or $26 million in 2016. Our development spend in 2017 is $46 million, almost twice the number of it was in the previous years. And our exploration budget was $26 million, over 2.5 times what it was 2016. So, but there is a delay from the time you're drilling these holes. There's about a 18 to 24 month delay from the time you can actually start to see an increase in reserves and resources, because it just takes that long to get assays and do block models and put out public data and so on and so forth. So, there's really no surprise that anyone should be witnessing from First Majestic's perspective, or from any mining company's perspective for that matter, due to the lack of investment. But now, we're optimistic that with the renewed investment in drilling and exploration and development, you're going to see those reserves start to turn around again over the next couple of years.
And this last year you drilled, I believe I heard you say over 150 meters of drilling. Is that right?
100, over 140,000 meters of drilling. So that's 1,400 kilometers, and that's around 1,000 miles of underground drilling. Now, that's a lot of holes. I forget the exact number of holes. We're actually putting a news release out in the next couple of days that'll update our investors on some of the successes we had in 2017, and we're going to cover off some of the exploration successes as well. We've actually putting the number of holes we drilled in 2017 in that news release. So, but I think it's over 500 holes. So it was an amazing program. It was the largest drill program ever in the company's history. And with the current cash flows, it allows us to start reinvesting capital again. And when you start to drill more, you develop more, all of a sudden your reserves start to increase, your production, your throughput starts to go up, and your ounces of production starts to go up. But I've been stressing to investors over the last couple of years that there's a delay from the time you start investing capital, which was really at the end of 2016. There's an 18 to 24 month delay from the time you can start to see a benefit of that investment. And we'll start to see production growth come again to First Majestic starting in mid-2018, which will be very refreshing after a couple of years of declines.
Yeah, I listened to your Cambridge House presentation, so that was quite exciting. One of the things you also mentioned in there was the new technology, the roaster that will help you with recoveries. Could you speak about that a little?
Yeah, there's been a number of technological advances we've been doing, and it's the entire mining sector, and I've been quite vocal on this topic. The mining sector is, very, very slow in change. And, there's technologies that we're using today in our business that are 100-year-old technologies. And, the oil sector has gone through several technological improvements over the last decade. The mining sector has been slow, but now it's starting to pick up, with some majors like Barrick and Goldcorp and ourselves and many other miners out there. First Quantum's another one, Teck is another one. Nico Eagle's another one. These companies, including ourselves, are at the forefront of technological change, and it's going to help us drive costs down, and it's going to help us recover more metal out of the rock that we're pulling out of the ground, which actually, of course, reduces your cost on a per ounce basis. If you go back even 3 years and look at our global recoveries of silver coming out of the rock that we're pulling out of the ground, was about 65%. That's a global number, all mines. Some mines are, of course, higher than that, and some mines are lower than that to give you that average. Today, that average is 80%. And for every 1% of improved recovery, that equals 100,000 ounces of silver. And that falls right to the bottom line as pure profit. We think with technological advances that we're currently adopting today, including the roaster, including other things that you can go to our website and look at and go through our presentation, our PowerPoint presentation, see for yourself some of the exciting things that we're doing. But we think that we can get recoveries up to 90% over the next 2 years. That's another 10% recovery. That's another 1 million ounces of silver we can pull out of the same rock that we're pulling out of the ground today. And that doesn't cost us any more. It actually costs us less to do it because of technology.
Do you think that the key technologies that investors should be aware of have to do with recovery primarily?
Well, of course, because recovery is really the key. Grade, of course, is very important. Higher grade mines, generally are more profitable, but recovery is very important. You don't want to be throwing a lot of metal into the waste dump, because that's metal that's being, that you're losing. So the more metal you can get out of that rock, you've already pulled the rock out of the ground. You've already spent the money to do that. You've already put the rock through the mill. You spent the money to do that. You've thrown all the chemicals at it. You've done all the processes. You've got the manpower. You've got all the equipment. You've got all the costs associated with that. So for sure, if you can get an extra 1 or 2% or whatever number percent of extra metal out of that rock that you're pulling out of the ground, it's basically free metal, so it drops right to the bottom line. So yeah, for sure. Over the last couple of years, that's one of the primary reasons why we've been able to reduce our costs throughout the business. focusing on recovery.
Tahoe Resources, their mine right now in Guatemala, the Escobal mine, is shut down due to the suspension of their social license. You have any thoughts on Guatemala as a jurisdiction and the situation with Tahoe?
I'm not an expert on Guatemala. It's an area that I wouldn't personally feel comfortable in. And I'm not saying that from hindsight. I put together First Mining Finance, which many of your listeners probably are aware of. I'm the chairman of that company, and we were looking at Western Hemisphere, North and South America assets focusing on gold, and there were several areas of North and South America that we particularly avoided, and like California, for example, and Alaska, and of course Guatemala and Venezuela, and places like this that I just don't feel comfortable doing business. And mining is a difficult enough job as it is, and if you don't have good solid land tenure and good solid mining laws to protect your assets and allow you to create business and actually export your metals to to the world market and so on, that could be a big problem for you trying to effectively run a profitable business. So there's areas that I would avoid, and unfortunately, that would be one of the areas I would particularly avoid. And it's unfortunate what's happened to Tahoe. I cross my fingers that they could resolve that situation. I don't like seeing that happen to anyone, but there are definitely difficult jurisdictions around that I would avoid, and that's one of them.
Keith, you're on record of saying that you see silver multiplying at least tenfold from these levels. What's your outlook for silver going into 2018, and also the silver miners, the share price of the silver miners in relationship to the silver price? What's your outlook in 2018?
Well, I tend to get called some of a quack, particularly over the last couple of years. I can't say I've been right. When I put First Majestic together in 2002, 2003, we started acquiring assets, and I was quite vocal about my predictions of silver at the time. And silver was $5 when I put the company together, and I suggested to people that silver was going to see $50 in the next 10 years, and it did. It took a little bit longer than I thought it would, but it did. It did actually hit just shy of $50. I would have never predicted that it would drop from 50 all the way down to the low $13 range. And that was a pretty painful move. We're now back in a bull market. I think the bottom is in, and we're now kind of going a sideways pattern, and we're seeing all the metals starting to move, and silver tends to be a bit of a laggard. It always is that way. And then it's just doing exactly what I expected to do. But I'm very bullish on silver. As you're right. I am a triple-digit silver guy. I'm a big ratio believer. We're as an industry, as a mining industry, as a whole, globally, we're producing less silver today than we did last year, and 2 years ago, and 3 years ago. Silver production has been declining. And we're mining at about 9-to-1 ratio. So for every 1 ounce of gold, we're only mining 9 ounces of silver, and we're trading around 75-to-1. So in my mind, that ratio just does not make sense to me. I think we should be trading at more closer to its mining ratio. So pick a number that you're comfortable with. But if you pick 10, that's $130 silver. It sounds ridiculous. I understand that, but that's the kind of numbers I expect to see over the next few years. And we're adopting new technologies and new battery technologies, fuel cell cars, electric cars, and solar panels, and all the things that we're accumulating silver or using silver for are increasing regularly, and that's not going to turn backwards. We're getting off oil and gas as a human race, and we need a ton of silver to go green globally, and that snowball's rolling. So that's not going to change. So there's going to be a lot more silver required to accomplish what where we want to go as a human race. And when it comes to the mining stocks, that's it's more of a sentiment-driven thing more than anything. The trade right now, as you know, Bill, is to go long the Nasdaq, the S&P. That's really where the money's been. The money's been chasing those high-tech stocks, and it's great to see people making a ton of money, but unfortunately, people are ignoring the mining sector, and to me, this is exactly what happened. I don't know if you remember, 2000, 2001 during the Y2K, fiasco and all the internet stocks that were going public. But, you couldn't find a mining analyst in Canada in 2000. They all became fuel cell analysts. Today all the mining analysts have become marijuana analysts. So it's pretty funny where we are today in the marketplace. People are chasing marijuana stocks, they're chasing cryptocurrencies, they're chasing high tech stocks, biomedical stocks, and that'll all change. But you just don't know when it's going to be, and when it does, that money will start flowing into the mining sector. And when it does, it's going to be crazy, like it always is, and there'll be a lot of money to be made, but in the meantime, it's a bit of a wait and see.
For silver investors and silver mining investors, I know there's been a lot of agony in the last year because of the disappointment and how the silver miners have responded to the silver price. So I'm highly invested in silver miners, your company included right now. So I hope for the best in 2018 and beyond. And the sooner the uptick in silver price comes, the happier I'll be.
Yeah, look, it's just a matter of time. We've seen so many indicators pointing to the future, and there seems to be a movement into lithium and cobalt and nickel, and copper's looking better. Gold broke through 1,300 here at the end of the year, and is now of course over 1,300. Silver's a little bit of a lagger, as I said earlier, but when silver starts to move, it's like virtually all these metals on steroids, because it's very thin. It's a very thin market. And when people start to come into the silver market, it moves big time. And at 800 million ounces being produced a year globally by all the miners, at $17 silver, that's less than a $16 billion market. So you think of how small that marketplace is. So it doesn't take a lot of money to move it.
Well, Keith, I appreciate your time. Is there any concluding thoughts or insights you'd like to share with listeners to conclude our discussion?
The mining sector is a very volatile sector, and it also can be quite risky. And people just have to, pick good management teams that are focused on building businesses. It doesn't always go right, and the metal prices often go against you. But, if you have a portfolio of good quality miners, I wouldn't just focus on one. I'd focus on a handful of good quality miners that are run by good management teams that have proven track records, that have built companies in the past, that are serious trying to build businesses into multi-billion-dollar businesses. Then that's a team that you should be focusing on, and then pick those core positions and stay long, because you just don't know when the market lights up, and when it does light up, it goes fast. And you don't want to be chasing these markets. You want to be buying them when no one else wants them.
Excellent advice. Well, thank you for joining me today, Keith.
Well, good talking to you, Bill.
Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.